Welcome to the Raw Spotlight podcast, where we feature inspiring leaders in the B2B space and share their unique stories. Let's get started with the show.
Hi, I'm Victor Huynh, your host of the Raw Spotlight, a podcast where we feature leaders from the B2B businesses and community partners and public service sector, including transportation, waste management, and environmental sustainability. Join us as they share their innovative strategies and inspiring success stories. Past guests include Christina Cordiero from Dream Big Children's Center and Rocky Castro, second-generation business owner that took his family industrial manufacturing business to the next level, working on massive projects like the SoFi Stadium and the Tesla lithium refinement project. Before we start, I have a sponsor message. This episode is brought to you by Ready Artwork, your trusted partner in B2B digital marketing and public digital outreach. We craft tailored strategies to help your organization grow and thrive long-term. At Ready Artwork, we combine data-driven insights with creative design to boost your online success. Our experts specialize in SEO, digital advertising, web development, and email marketing, helping you unlock new opportunities in the digital world. To learn more, visit readyartwork.com. Today, I'm joined by Haas, co-founder of Alamir CPA Associates. Originally from Iran, Haas made the bold move to the United States at the age of 26 with a degree in mechanical engineering. After arriving in California, he took a leap of faith, switching to accounting and earning a graduate degree with honors from Cal State LA. His career began at the global firm BDO, and he quickly rose through the ranks, gaining deep expertise across tax reporting, financial consulting. In 2023, he launched Alamir Accounting, and by 2024, partnered with family and a longtime friend to evolve the firm into Alamir CPA Associates. What makes Haas stand out is his strategic CFO services, designed to help small and mid-sized businesses make smarter decisions, manage cash flow, and scale sustainably. Please join me to welcome Haas to the show. Welcome, Haas.
Thank you, Victor. Thanks for having me. I appreciate you.
Yeah. So let's start from the beginning. So what was it like growing up in Iran and moving to the US at the age of 26?
It was fun. Iran is kind of two societies. There is like a government society that everyone is like restrict and no movement. But the underlying city, like underground life, it's so fun. Like you party, you go to disco, you go to club. I've been to clubs in Iran that it's not even in LA, but obviously they are not permitted, so it's illegal. So you go there with your own risk, but it's fun.
So it sounds like a crazy underground life over there.
It is. They have a crazy underground life. Yes.
Yeah.
But it's so fun.
And what made you move to the US?
So my family, they used to live in United States before the revolution. Both of my brother, they were born here. And after revolution and in the middle of the Iran-Iraq war for like 8 years, they decided to go back to the country and just kind of help the country. So I was born in the middle of the war after they moved to Iran. And then we all kind of stuck there. So my brothers, in Iran, you have the mandatory military service.
Mm-hmm.
So every man who turned to 18 has to go to military service unless you have some type of exception.
Mm-hmm.
So both of my brother, after they graduate from their high school, from the college, they kind of got the exception and they moved to United States. They were easy. They just had a US passport and they just moved. And then they applied for green card for me. And it took like 5-6 years for me to get a green card. And when I turned 26, I got a letter that I'm clear.
Yeah.
And in the meantime, I got the exemption from the military service.
Mm-hmm.
And I bought a ticket and just moved here.
Oh, wow. That's quite a story. So I see on your bio that you originally studied mechanical engineering. So why didn't you continue mechanical engineering, and what made you pivot into accounting?
You're kind of gonna laugh when I say the reason. So the reason I went to kind of be a mechanical engineer is when I was child, I like cars. And I said, like, a mechanical engineer is that dealing with cars. It's not that case. That's so I studied hard maths, and then I moved here and I went to CSUN, Cal State Northridge,
Mm-hmm.
and I talked to the mechanical department, the chair department for like a mechanical engineering department.
Yeah.
And he kind of told me, if you want to have a long career, don't study mechanical engineering. And I said, why? And his answer was, within the next 10 years, all the electrical engineering, the AI, they're going to cover the mechanical portion. So you're going to be out of job. So if you want a stable career, just find something else. And I have 10 cousins, and like 6 of them are accountant.
Wow.
So I kind of said, okay, everyone's accountant, why not me? So I studied accounting. It's a fun, to me, it's a fun field of work. It's like lots of puzzles, so it's not boring.
Mm-hmm.
And so I switched to accounting. I went to community college to fill out all the prerequisition. I applied for in Cal State LA.
Mm-hmm.
I passed the GRE and then graduated in 2015. And then I started working.
Wow. Wow. Okay. So it's almost like in your blood, huh?
Yeah. So we are 10 cousins. We have 2 engineers, 2 attorney, and the rest are accountants. So
Wow. Wow. Okay. So you're in good company. So let's jump into the business right now. So Alamir CPAs and Associates, your focus is specifically on CFO consulting, and that's your key differentiator.
yes.
How do you explain that service to a business owner who may not realize they need it yet? Like for us, we've been in business for 20 years, but when I started, I had no idea that, what does even a CFO do, right? So how do you explain it to someone that is not even aware that they need it?
So the big point of pain for most of the business owner is they don't understand their numbers. They just see the P&L and they see, okay, my revenue is X, my expenses is Y, and that's it. They deal with the tax return at the end of the year, and they are not even bothered to understand the KPIs. And they are so busy, like rightfully, they are so busy running a business, dealing with operation, so they just don't have time. During my working career, I started the BD, and then I went to the company called Signature Analytics, based in San Diego. I worked there for like 6-7 years. And what I understand is only big companies, they hire the full-time CFO to deal with all the accounting data. And none of the small to mid-sized companies, they even bother to have a CFO on their side. And they are right, CFOs are expensive.
Right.
Like if you want to hire a full-time CFO, you have to pay like $200K in the salary plus all the benefits. So we thought, okay, I have all this knowledge I learned from my previous company. They're in the consulting. Why not apply it to the small and mid-sized companies who doesn't want to or can't afford the full-time CFO? So we start developing that path and be like kind of a fractional CFO. You can just hire us as a fractional CFO, not the full-time. You don't need to deal with any benefit. Just we're gonna be on your side. The differentiation is we now gonna go to your book first. We're gonna make sure your book is accurate. Either your internal bookkeeper or whoever does your book, we can do the bookkeeping. That's fine, but I'm not gonna be involved in bookkeeping. So we're gonna make sure the book is accurate. Then we're gonna extract the KPIs. Something that business owners are missing, they don't understand like revenue is the outcome, it's not the KPI. KPI is the underlying reason to get to the revenue. All the factor that you need to do or not need to do to get to your revenue goal. So we're going to extract those KPI and kind of make sure our client understand if you're going to be like a $2 million company, these are the steps you need to do. These are the KPI you need to follow to get to that. You cannot just look at your bank account and say, I don't have $2 million. Like there should be a path to that.
Right.
So we develop that path and make sure that client understands.
So I guess for our audience, right, at what point should they start thinking about CFO services? Like obviously if they're just starting, they're figuring things out. Like is there a certain indicator, like a certain level of revenue or certain maturity level that you look for to, okay, now I need CFO services or even a fractional CFO service?
So when you fund your business, you make sure you have the QuickBook or any accounting software ready. You can hire like a bookkeeper for like $20 an hour, $15 an hour, or you can go to the India for like $2 an hour. So have a bookkeeping. That's the first step. Make sure a book is accurate. And then you as a CEO or operational visionary, you can plan your growth the way you want. That's fine. But when you get a certain number of revenue or certain number of customer that you have, you just cannot rely on your bookkeeping. Like to me, that revenue threshold is like a 500, 600K revenue threshold that you are growing and you are building the foundation. You don't want to get to the $2 million revenue and have zero foundation. So like when did you get to the 500, 600 recurring revenue that you are, and they are stable, then you need to think of, okay, I need the CFO on my side, maybe like 1 hour a month, 2 hour a month, just to make sure my book is accurate, make sure I'm planning everything right. And at some point you might need to finance something, you might buy a business, you might sell your business. So these are the things you don't know yet, but the CFO can kind of understand, like if you're 500,000 revenue, you might have a cash crunch 6 months down the road, but you just don't know yet. But the CFO can analyze your cash flow and just tell you, hey, in 6 months, you're going to have a cash flow issue. If you want to get a loan, let's get a loan. If you want to do something, let's plan for it.
Awesome.
So that's what the 500, 600 is our
mark. That's a good rule of thumb, right? Obviously, there's other things to think about, but at least, so for those of us that are, we don't know, we have a bookkeeper, we have QuickBooks or whatever it is, and asking ourselves, when should I start thinking about CFO services? About the $500,000 a year is a good time to start thinking about it. Okay.
Yeah. Like we can return a fractional CFO for like at least 2-3 hours a month just to make sure you're on the path.
Yeah, that's great. So let's just say for someone that signs with you, right? What are some basic high level steps? What's the first thing you look at, and how do you start your fractional CFO service with a typical client?
So the first thing we do is to make sure the book is accurate. 90% of people, they are saying the book is accurate, trust me. And then we go to the reconciliation report and like the book is not reconciled. Okay. So we want to make sure the cash is reconciled. We want to make sure all the balance sheet items are accurate. And if the balance sheet is accurate, P&L by default is accurate. It might be a reclassification of expenses, but it's accurate 90%. Then when we get to that point, we're gonna look at the market, study where the company is there right now, what the goal of our client is, and based on the market analysis, we're gonna create the KPIs for them. For example, let's say you want to sell your company 5 years down the road, and we're gonna ask the question: do you have any exact exit plan, or do you want to just grow it? If you want to sell your company, we need to make sure the KPI that we are tracking matches your goal. Like you want to make sure your cash flow is good enough for a potential buyer. You want to make sure your EBITDA is good. You want to make sure you have enough cash reserve, because 90% of buyer, they want like have something 90 days of cash reserve in the bank. We want to make sure we are moving toward the highest valuation. Versus if you don't want to sell your company and you just want to grow, we're gonna mainly focus on the cash conversion cycle, making sure you have enough cash coming in, making sure with the next 13 weeks, 14 weeks, you have an accurate cash projection. Plus, we gotta track all the growth KPIs like the gross margin, gross profits, the return on investment. We're gonna track all those things and measure them and give you a report so you as a business owner can understand your inefficiency and efficiency. And then you can correct course as you need it.
Okay. I know you mentioned KPIs a lot. I mean, in marketing, we use KPIs a lot as well, right? Key performance indicator. So maybe you can give us like a high level of what a KPI is and what is one, like an example of one really popular KPI that you guys track and what is the value of that?
So as you mentioned, KPI stands for Key Performance Indicator.
Yeah.
The difference is KPI is not your outcome. So you cannot track your revenue and say, my revenue is my KPI.
Right.
You need to go one level deep and understand what's going on in your revenue recognition process, and that's your KPI. So, for example, we have a client that they are about $15 million revenue, but they have $0 cash in their bank account.
Oh.
And we kind of, when we signed them up, we kind of didn't believe that. So we start developing a KPI, and we understand they are just not, their cash conversion cycle is all like a between 90 to 95 days, which means they are paying their vendor on time, but they are not collecting fast. So we kind of had to reverse engineer, like, okay, you have to collect in 30 days and pay your vendor in 45 days. So you can kind of be in a positive, not vice versa. So we are still in process, but they are getting better and better and better. It takes like probably 6-7 months for them to be a positive cash flow. So KPI kind of understand that. And the client he's very smart. He's kind of genius in his field, but he just doesn't understand. He just want to make sure his credit score is good.
Right.
And keep telling him like, your credit score is not gonna affect it. Trust me. You just need to pay it later on, like 15 days after. So
okay. So
the other thing is like we're gonna try to make sure your gross profit is accurate. For example, if you are in the service industry, your gross profit usually between 40 to 60%. But if you are in the construction business, your gross profit usually between 15 to 25%. And if your gross profit is not in the range, something is off. And we're gonna point that to the client, like something's off. Either you need to make sure you increase your rates to your clients, or your cost of goods sold is too high. Why? And right now, because for all these policies, we are developing all this gross profit KPI for all of our clients, especially for the one that import from the overseas.
Yeah.
To make sure if they are paying a additional cost, we're gonna adjust the revenue, and that's unfortunate, but we have to do that.
Yeah. I know you already shared an example with the cash flow. Do you have another story where you helped a client solve like a big problem or a very serious problem?
Yes.
Okay.
So I had a client, they were in the mental health business. They had the institution for the people who have like a problem with the alcohol and the other drugs.
Okay.
They were dealing with the insurance companies, which is fine. The insurance companies usually pay on time, but they didn't, with the cash coming in, there were lots of waste in the company. And the reason is the owner was a psychologist. He was really a smart, he and his wife, they were very smart people on their field, but they kind of couldn't understand, okay, the money coming in, I'm paying this vendor, I'm paying that vendor, I'm paying all these people, And they didn't understand by paying all these people, they are crunching their profit. So they were in the business for 5 years, and then they wanted to sell the business. And then they call me and they say, hey, we find you, we want to sell our business, everything's in order, just help us to make sure we get the highest valuation. We said, fine, we sign a contract, and then we start talking to the potential buyers, and we are getting a lowball offers. And we kind of put a pause on that and say, like, let's not do that. This offer are not good enough for you, and especially you want to retire at the age of 70. So we gather a team, we make sure first the book is accurate, that's fine, and we identify all the waste. We start cutting, like they are paying for Instagram, Facebook, TV advertising, all the different marketing channel, and we kind of like, you need to hold in one channel and just make sure to focus on one vendor that's good enough. We cut all other vendors and focus on Facebook. Then we start cutting all the unnecessary vendors. Like they have three different gardener for three different facilities. And I'm like, stop doing that. Just pick the one that's good enough. Give him all your three facilities, and just negotiate with him. Like, I'm giving you these three. Just give me a discounted rate. And then the other tactic we did, we kind of created tax strategy for them to pay the least amount of tax as possible, like as least as possible, legally. So basically, and kind of make sure their tax strategy are good enough. So we basically, from super inefficient company, we made them to the efficient, profitable organization, and then we went through the selling process. And then they found the VC that they were interested. We started negotiation in September of 2024. We sold it for $10 million cash. So it took us like a year and a half to get there, but these are the things that CFO can do, which as a business owner you don't understand that.
Right. What were the lowball offers before?
$2-3 million.
Oh wow! So like 5x. Wow.
Yeah. So we kind of solved their cash flow issue, and then they got a higher value.
Nice. That's a huge case study. Yeah.
That's a good. That's one of our success stories.
Yeah. Okay, so let's get into now more technical, like financial leadership and planning. So one of the biggest challenges for business owners is decision making. How do you help clients make smart, data-informed choices?
The most important part of decision making is timing. If your book is not accurate and you want to have like a 15-20 days close after the month end, you are not going to make an on-time decision. You want to make sure your book is accurate on a weekly basis. You want to make sure you get your KPI 5-6 days after the month end close. Then you have the on-time decision. Right now, with all the technology, it's there. You can connect your bank transaction to your accounting software and just reconcile it on a daily or weekly basis. So your book is on time. And then you can make a decision. If you want to make sure, if you wait for like 20 days after you get the financial report, it's a moot point. Okay, you got your financial, it's good for a bank, it's good for a mortgage, but it's not good for a decision-making process. You need to make a decision on time. And that's what we come and we help the client. We make sure we use all the AI technology, we connect the accounting to the bank to the bank accounts. And either our bookkeeper or internal bookkeeper, we task them to reconcile transaction on a daily basis. So basically, like if you use QuickBooks, by 9 p.m. California time or midnight Eastern time, QuickBooks have automatic sync with all the bank transaction. So they bring transaction, they hold it in QuickBooks, and the bookkeeper needs to just go there and accept and reclass the transaction to the appropriate buckets. Then you can run the financial, like P&L balance sheet. It's accurate. If you don't do that and you wait for like a 2 months after the fact, I mean, who cares? Like, okay, you have a data, but it's not good enough for your decision
Right.
making. So
Right.
we had your data should be on time and accurate.
Okay. Okay. That's a big one. Yeah. I think a lot of people are kind of guilty of that. Oh, our
Yeah.
reports come in whenever they come in, right? Whenever my bookkeeper has time. Yeah.
Yeah, you need to make sure you have it like 5 days after the month end.
Yeah. So many business owners aren't numbers people, right? They're, like you said, they're psychologists, they're artists,
Yeah.
they're designers, whatever. How do you simplify complex financials without losing the story behind the numbers, right? Because the numbers tell a story.
Exactly.
How do you connect that to them for them to understand?
We kind of have to translate all the KPIs
Mm-hmm.
to our client. Like when I say gross profit in a general term, that means revenue minus your cost of goods sold, excluding your administrative. So when I call like our client who are dealing with the like artists or they are dealing with the restaurants, when I tell them gross profit, which is easy term for me,
Mm-hmm.
they kind of have to go back up. What do you mean? So over the time, I learned instead of using gross profit, I'm gonna tell them, hey, your cost is too high or your revenue is too low. So it's the same meaning, but it just translated different language, like coming from numbers to the accounting. And it took me a while to understand this gap. I used to have meeting with clients and just explain them in the accounting term.
Yeah.
And I usually like lost the clients, like, what are you talking to me? Like, so I had to basically learn how to communicate accounting to English or translate them.
Yeah. Yeah.
So basically, for ROI, we're gonna say, hey, you invest this amount of money in your company, you got this amount of cash in return.
Mhm.
So it's good or bad, depends on the situation. But I'm not gonna use the ROI. So
Right. Yeah, I remember the first time I learned about gross profit. I was like, what is that?
yeah,
So a lot of people get gross and net mixed up, right? Yeah.
exactly. So we're trying to instead of using a term, we use the terminology in the formula
Yeah.
when we explain.
Yeah. So what are the most common or useful KPIs that you track?
Cash conversion cycle is the most important. Gross profit, EBITDA, uh, the inventory point order we need to track. Like you don't order inventory either soon, like late or very early. So we have to calculate your point of order. These are the 4 or 5 important KPI that we're gonna track all the time.
Mm,
And again, as I mentioned before, depends on your goal. We're gonna develop a different type of KPIs.
that makes sense. That makes sense. Okay. So, kind of stepping away from CFO services, you guys also offer CPA and tax services. How do these complement what you do in the organization?
So that actually helped us a lot. So as I mentioned, 6 of my cousins, including my brother, one of my brother, they're accountant.
Yeah.
They are in different fields. We have a forensic accountant, we have a tax accountant, we have the internal accountant. So we have all different types. So my brother has his own firm for like 6, 7 years. And then I left my old company and fund my original company in 2023. And then we're talking to parties, and we have one of our best friends who is a partner in the firm too. So we kind of talk about in the parties like very casual. Let's kind of get together. Like I'm gonna refer you clients, you're gonna refer me clients. So the conversation is start. We are referring each other clients,
Mm-hmm.
and then at some point, the part that are one of my partners and best friend, he said, "Why not just join? Like merge? Like instead of referring, just merge. Let's have one accounting firm to offer both tax and CFO service." That's a perfect idea. We didn't know why we didn't thought that for like 6, 7 months before that, but
Uh,
January 2024 we officially merged. It helped me big time
uh-huh.
because I know now how much my clients are gonna pay taxes, so I can project their taxes in their cash flow.
Yeah.
It's gonna help my partners if they are filing a tax return for my clients First, the book is accurate. Second, they know they kind of know the cash situation of my clients, and also the strategy I'm gonna have. Like, if you want to sell the company, if you want to have an asset sell or a stock sell, you need to have a C corp or S corp or LLC. So they kind of based on my vision for a client, they're gonna plan their tax planning.
Mm-hmm.
Do they need to change the company structure? Do they need to uh, kind of close the entity or not close the entity? So we are in communication. We just kind of walk to the office like, hey, I want to do this for this client, and they take a note and they're fine. The biggest advantage of the client is they are not now. Usually, clients are the middleman between the CFO
Mm-hmm.
and the tax accountant.
Yeah.
And they are talking to one person, and that person is not accountant, so they get confused. And then they send the email, let's connect my CPA to you, and then they are gonna be in the kind of aggressive language. For the client has a benefit of, if you are doing dealing your book and tax CFO services and taxes, you have no worry. We're gonna do your book, and April 15th, you get your tax return. Bye. You don't even have to worry. We have all the documents. We need everything we need to file a return.
Right.
And on the other hand, the tax department, now they can project the they're gonna do the tax projection or tax planning, because now I understand my clients need, what they need to do, and they gonna have a better tax planning for the clients. So it's kind of come together as a whole package.
Nice. Kind of like the Avengers, right? Yeah, everyone has
Yes.
their little role. So, how do you help clients integrate their year-round tax planning with their broader business goals? I know you're like CFO is more macro and you look at certain things, right? So, how does the tax planning throughout the year kind of align with the business goals that you're trying to help?
Yeah, so that's what I just mentioned. So
Yeah.
the tax planning,
Uh-huh.
it's if you let me go back. If in a very like a normal world that the CFO is doing their thing, the tax accountant doing their thing,
Mm-hmm.
tax accountant usually have a 2 meetings with the client during a year, like the one in 6 months,
Mm-hmm.
one at the year end.
Yeah.
They gonna understand how much revenue you have, what's your net income, what's your estimate tax payments, and then that's like around June. And by the end of November, December, they're gonna do the one tax planning for a year,
Mm-hmm.
and they kind of come with the estimate payment for the next year.
Mm-hmm.
And that's all they do.
Right.
What we came in agreement with my partner is, if you're gonna do taxes for my client and I'm gonna do CFO for your client, we need to be in sync. If my clients change their decision, the like by decision I mean their vision for the business,
Mm-hmm.
we're gonna be in sync within the like a 5-10 minutes, so we can change course for a tax strategy.
Mm.
Let's say I have a client who wants to sell the business in 5 years. That's a different tax strategy. We want to make sure your corporation is based on your tax bracket. We want to make sure either C corp or S corp, whatever suits you. We're gonna analyze that and be planned for that. If you don't want to do that and you just want to, if you're growing massively, like going from the $2 million to $10 million, you sign a massive contract.
Yeah.
Okay, you're gonna change your tax bracket, so we need to make sure we plan for it way in advance before you get that massive bill from IRS. That means changing your estimate payment to the IRS. That means if you are uh, having an operation in overseas, kind of we need to change the intercompany agreements. Maybe we need to develop a management company to manage your entity to reduce your taxes. These are all tax planning that the CFO and the tax accountant needs to be in sync.
Yeah.
But if your CFO is going in a different room and tax accountant is a different room and never talk to each other, at the end of the year, you're gonna get a massive bill. If you don't,
Yeah. Seen that before.
yeah.
Okay. So What's next for Alamir CPA and Associates? Like, especially in terms of growing your CFO services, what is your vision moving forward?
So the vision for us is make sure we're gonna grow the company by growing a team, but mainly by growing the efficiency and using AI.
Mm.
So that's our goal. We want to make sure our policies or a procedure in the firm is gonna support our vision. So one thing I'm doing for our client that we are gonna do for ourselves. So we have no plan to exit the business, but we just want to grow it to make sure instead of working in the business in 24/7, kind of going beyond that, and we as a true partner making sure we are working on the business. So within the next 2 years, we're gonna start utilizing all the AI tools, making sure the policies and procedures are accurate, and then we're gonna the onboarding process for our firm. We need to make that efficient, and then start growing the firm to hopefully $20-25 million business within the next 7 to 10 years. Maybe
Nice.
sooner. You never know.
Nice. Yeah, and I think that's the biggest benefit in terms of what you're doing, right? You're talking to these business owners that all want the same thing. Like every single business owner, like wants to get out of the weeds and wants to set up structure and kind of do everything. So I think that's great that, that's the same direction that you're going. So you can actually help your clients out.
And the AI is kind of, we don't have any excuse. AI makes everything easy. For a procedure, SOPs are like different tools. So
Yeah.
you just need to do that.
So I have one last question, but before I
Sure.
ask it, I want to point people to your website. It's www.alamircpas.com.
We have CPAs, yes.
Yeah, CPAs.com. And my last question is, since we talked about AI, what is your favorite tool or software that you find essential for your day-to-day work?
For me, there is a software called Fathom.
Fathom, okay.
It's super user-friendly. It gives me all the graphs and data I need to export from QuickBooks. Instead of doing manual Excel work, it's just a quick sync and I get the data. So it made my life super easier. I used to spend like a few hours to make sure the data in Excel is accurate and then export the graphs. But now Fathom is just one sync away to get the data.
Cool. Is it industry specific or is it more of a general type of
It's a general, they have like a general KPIs, but you can customize it based on your industry. So they have all the KPI you need.
I see. Very cool. Very cool. Okay. So Haas, thank you for joining us and sharing your personal and professional journey. It was very cool. From Iran to California, from engineering to strategic financial consulting, right? Your story is super powerful.
Thank you, Victor. I appreciate you.
Yeah. And your mission to help businesses lead with clarity and something our listeners can really learn from. So for everyone tuning in, if you're a founder, nonprofit, growing a team, ready to think bigger regarding your finances, be sure to check out Alamir CPAs and Associates. Thanks for being a part of the Raw Spotlight community. Until next time, stay curious, stay driven. And Haas, you're also active on LinkedIn, right? Well,
yes.
So we'll link you up on the episode as well.
Thank you so much, Victor. I appreciate you. It was fun.
Yep. Thank you.
Thank you.
Thanks for listening to the Raw Spotlight podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.